you're looking at Target and Walmart. I'm going to throw them both in here. They saw pullbacks in discretionary spend, so discretionary items. And again, mostly due to surging gasoline prices. The cost of fuel and freight are insane. Walmart talked about it, but Target, the CEO, came on and said it's going to result in an extra $1 billion in costs for energy, for fuel and freight. And they said that they did not anticipate. That's why you've seen the stock sell off tremendously. And someone asked the Target CEO, why didn't you warn between quarters? This caught us by, they were like, usually companies, when they're having a bad quarter, they may say, hey, look, this, they warn, right? And, it's like a pre-warning and saying, hey, just prepare. And usually their pre-warning is worse than what comes out. And, when they report, they're like, oh, they did better than the pre-warning. The stock will go up a little bit. But usually when companies warn, they fall sharply. So they asked the CEO and said, hey, why didn't you warn between quarters? Because you've done that many years ago. And he said, it was remarkable. He said, this happened so fast. They didn't get a chance to. This is how quick customers like that, consumer sentiment can change. And when it does, look out. Retailers know that more than anything. Everybody wants something. They want it. And then they build up this massive amount of inventory. And all of a sudden people are like, you know what? That was pretty cool, but I don't want it anymore. You don't know what changed sentiment, but it's just like something going viral. You can't say, wow, I'm going to produce a video. It's going to go viral, right? That never happens. It's the things that go viral are just weird. You don't know, right? It's so hard to understand that we try. That's why analytics right now is such a big deal. That's why Facebook is turned into $1 trillion company. And now that got cut in half and the social media companies, because you're learning more about the consumers. You're trying to understand them, but the change in sentiment is almost impossible to predict. It happens very, very quickly, and it's happening now, and it happened with Walmart as well. And that's why when Cramer was like, I was so pissed off, I talked to the CEO, and this is a great investment. He probably added to his position, or he has his portfolio, and then they come out with the warning, and they blow the quarter, and he's like, what the F? What the fuck's going on here? Well, what's going on is he wasn't lying to you a month ago. Neither was Target. They're not lying and say, holy shit, what's going on? A month and a half, 2 months ago, they were just like, whoa, out of nowhere. And you could see 2 months of that quarter strong, and all of a sudden nothing in the last month of that quarter, right? The first 2 months of that quarter, last month could be holy shit. And that seems to be happening, where what have we seen? Inflation rise tremendously. The Fed raising rates, right? Last couple months. So, and now you've seen a huge rise in energy prices, and that's enough for people to be like, okay, enough's enough. I can't afford this shit. Holy cow. I mean, the amount of money that's coming out of my pocket right now, see my savings dwindle, it's getting a little crazy. And that's the reality. That's the reality. But consumers at the same time, significantly cutting back on spending, what happens? It leaves these companies with inventory concerns. And let's talk about that real quick, because this is major, guys. You need to understand this, and we could probably make a lot of money off of this. Because we have companies like Ford, GM, Target, Walmart, Best Buy, every semiconductor company that produces components that go into the billions of electronics. Your furniture companies, kitchen appliances, sporting goods, material companies, almost every retailer. What was going on over the past 12, 18 months? These companies were seeing unbelievable demand because so much money was injected to the system. So much demand, massive, massive demand, but they couldn't get enough supply to stock their shelves. Everything you ordered, if it's golf clubs, it's a mattress for me. Those two things took 6 months, more than 6 months. Right? If you want to, how long has Ford said? For 18 months now. Hey, we got the EV, the Ford Lightning. Have you seen one on the road? I haven't. How many people have gotten? A handful? All these EV things. This story for Ford and GM has been here for 18 months. And longer than that, but 18 months. Like, we're producing all this shit, all these EVs. We're going to take down Tesla. Where are they? Where are the EVs outside of Tesla? Have you seen any? I haven't seen one outside of Tesla. Yet they've been promising us for 18 months that, hey, we're here. This is it now. They've been promising freaking 3 years. But now it's supposed to hit. Everything's great. Supply chain concerns, everything, right? So what have these companies been doing? They've been doing everything they can, right? Over the past 12 months at least, or everything in their power, spending billions to build more factories, use better software. Intel's opening up more fab plants. You've seen, Jim saying we're spending $30 billion here, all this craziness. On EV, they said first it was going to be 20 billion, 30, I think it was 10 billion, then it was like 22 billion, now it's 30 billion as of last quarter. They're spending on new technology and everything, all this stuff, software to fix their supply chains. This way they can get their goods in their store to meet that massive demand. Now, demand's starting to tail off. They're tailing off when, holy shit, we're starting to get that inventory in now, and inventory levels have risen, right, for many of these companies. So now we're seeing big warnings, massive warnings. I mean, it's the worst scenario. I saw this with Taiwan Semiconductor in 2017. They decided to go all in on chip production because crypto was booming. And they said, wow, we got to produce a lot of these freaking chips. It's absolutely booming. We're seeing massive demand. It was like, it was still accounted for less than 5% of total profits, I believe. And it was like, whatever it was. I mean, it was $200 million in sales they were generating like right away. And they said, okay, we got to allocate. And remember, we're looking at the semiconductors, which have, their capacity, at 100%, they had like, hey, we have 5% capacity right now in 2017, 7%. Let's use it for this and build it. And then they built it and crypto absolutely crashed and no one was buying these chips. And they said, we can't do that anymore, right? Because now we're sitting on inventory. What are we going to do with these freaking chips? We got to sell them for like, 60, 70% discounts and get them out of here. Because, outside of NVIDIA and gaming, you have massive amount of chips for these super crazy computers that you really didn't need now. And you're coming out with next generation in a couple months and years and stuff. So, that's what happens. But you look at a time where inventory levels are rising for these companies, now demand's tailing off. So we're probably going to see some big warnings going forward because this happened so quick, especially with the latest surge in energy prices. And that's going to result in a lot of names that, claim they solved their supply chain problems to see, similar declines when they report or warn that we saw a Target. I mean, that's if demand slows, right? Because they're sitting on massive inventory, meaning they're going to have to discount that stuff tremendously to sell it. It was in high demand 2 months ago, a month ago. I mean, you don't see Target, right? Target and Walmart come out. These guys have a better indication of the consumer than almost anyone. Access to hundreds of millions of consumers in the U.S. alone who shop there. And for them to say, holy shit, this caught us off guard, and we didn't see this coming, where in the last 45 days of the quarter, basically, people just said, we're not buying anything anymore. I mean, holy shit. And I said a couple of categories, outdoor and stuff like that, but most of the categories across the board, they're saying discretionary, they're just surprised that everyone's cutting back so much. Now, the silver lining here, which is important, the silver lining. We're about to see inflation fall rapidly. Not with food and energy. I covered that. I told you why it's not going to happen rapidly. It's still months, perhaps quarters away. But we're going to see inflation fall across the board since companies no longer have pricing power. They can't raise the prices right now because no one's buying. They try to raise those prices. Now they're like, holy shit. How often have you heard that we have to discount things to sell them? Target and Walmart just said that. We haven't heard that since COVID. Because there was so much money in the system. We haven't heard that. Airlines raised their prices by 17% month over month, not year over year, month over month. Think about that. And they're getting that. That's because people are traveling and I want to go on vacation. I haven't been on vacation in a while and I want to go because the last 2 summers were fucked by COVID. I need to go. I get they're paying for that, but they're not going to pay for those discretionary items they really don't need right now. And again, Target, Walmart, these are companies, right? And we're hearing this from the 2 biggest big box retailers in the world who have the best supply chains, the best management teams. And these guys got it wrong. The next shoe to drop is restaurants. Any restaurant that's held up this year, probably great shorts right now because the consumer is cutting back. But outside that, we're going to see inflation fall rapidly. That's the silver lining here. That's what you need to see. The only way you see that is if investors are like, I am not paying these high costs anymore. Because then you have to lower prices. And that's what Walmart said. That's what Target said. That's a great thing. That's a sign the bottom is close. And a lot of this other shit, and I know people are seeing it going, oh my God, how is this going to get better? We're down, accounting for a lot of these risks that we talk about every single day. But we're going to see inflation come down sharply over the next couple months, not in energy. We see it in the core. We're not going to see massive increase, maybe a little bit through summer, another increase be passed through airlines and traveling and hotels, but people are going to start, once summer's up, after that, you're going to see a big decline in inflation numbers, both CPI and PPI. When that happens, that's going to be the opportunity because the Fed, hopefully, over the next few months and few quarters, are going to be raising rates aggressively. Again, it's going to be choppy and painful. There's going to be ways to make money off this market. Considering a lot of stocks are down 40% plus from their highs. But start picking away at some of those names. Over 100 names, S&P 500, like I said earlier, trading below 10 times forward earnings. That's a great thing. That's a really great thing. But when you look at the market, that's the silver lining. We'll see inflation come down because we see for the biggest retailers in the world saying, hey, holy shit, they're not buying our stuff all of a sudden. That's going to happen across the board. That's not going to be limited to the two biggest retailers. Right? Maybe you have like the Lululemons and stuff that are able to keep a little bit of pricing power, but are they going to maintain that huge multiple? I don't know. I don't know about that, especially when everyone else is one. They said apparel is actually pretty strong. Outdoor stuff, pretty strong. But still, Under Armour warmed as well. Nike, I mean, look out. But Walmart, Target, they're the bellwethers. They have access to data, hundreds of millions of people. Nobody knows the customer better than these guys. They're saying loud and clear, consumers are cutting back on spending. We knew it would happen. We were surprised it took so long with inflation running wild and the Fed moving the punch bowl, but be careful buying those survivors right here, companies that weathered the inflation storm, especially, this year to date, because that's the next shoe to drop. Again, the silver line, we're going to see inflation fall sharp in the months ahead. It's going to be the catalyst to buy cheap stocks that are still able to grow earnings, which, again, there's a lot of names like that, or names that are already falling 30% plus, which is almost every name in the NASDAQ right now, and most stocks across markets. But I'd be careful. Even some restaurant stocks have held up well. That's going to be the next shoe to drop. Chipotle's and things like that. Are people going to pay that much for food? No. If they're cutting back for just regular items, they're going to come back on food as well. Meaning that these companies are going to lose their pricing power. And once they do, look what happened to streaming. Those guys lost their pricing power. Look at all streaming across the board. When you lose your pricing power, these stocks fall like a rock. So the ones that have held up well, be careful. I think restaurants will be the next shoe to fall. However, there's lots of names that are pricing this in, trading cheap, are going to grow earnings. It's going to be difficult over the next quarter or so. We see inflation a little bit all over the place, but now the trends are in place where they're losing that pricing power. We need to see inflation come down, and now the writing's on the wall. That's it. The two large retailers, both back to back, 2 days in a row, both got nailed, said the same exact thing. Holy shit, we can't believe how much the consumers pull back. Why? Because they're not paying those higher prices anymore. They're done. That's a good thing. Short term, it's going to be a negative for the markets. You see stocks come down, but it's going to provide even better valuations for you to buy. And it's going to be, I would say, 2 years from now, 3 years from now, you're going to be like, holy shit, buying at those levels was absolutely amazing. It's going to be choppy. You can go down a little bit, but if you have a long-term outlook right now is